Hello viewers, welcome to my channel Rohan Finvas. Today I'm going to cover a couple of important concepts in price action trading. Some of you might have heard about these concepts, some of you would know, but you do not know how to trade based on that. So we'll look at the practical examples of how to trade based on these two concepts and not just the theory part of it. So we'll look at the recent examples, we'll look at the historical examples, and we'll try to understand how one can trade based on these concepts. And these are very, very simple concepts. It doesn't involve a lot of complex, technical analysis per se. It just involves kind of common sense and most probably I would say logical reasoning. And this is key because if you do not know when to buy a stock and when to sell a stock, you would fall behind in the race because you are trading against the professional traders who have an access to advanced systems. How one can really uh, you know compete with them. So the biggest market participants are the FIIs, the foreign institutional investors, and DIIs, domestic institutional investor, and there are also some HNIs who have an access to advanced systems. And if you want to make money in this particular market, you need to have certain systems, certain rules in place. Otherwise, you really cannot compete with them and make money. So today, let's try to learn couple of important concepts of price action trading. First of all, what is price action trading? You would have heard this term many times, and many people would have talked about price action trading. In simple words, the price determines the movement of the stock, and we need to understand the price structure. And if we do not really understand the price structure, we will not be in a position to make money because we'll be going against the trend. And if we go against the trend, normally we will lose money. And in order to safeguard our capital, we need to first understand the price structure. Let us try to understand uh, the concepts of support and resistance. So as you can see over here, the support is also called as demand and resistance is also called as supply. In simple conventional theory, we have learned what demand is and what supply is. Demand is the price point or the price zone where there are many people who have a willingness to buy. So the market participants feel that when a stock reaches a particular price point, the price is expected to take support, and a lot of buyers are expected to come in and buy the stock. We'll try to understand with the practical example on the chart, but just for the sake of understanding, I created this particular line chart wherein you can see the rates, the circles marked in green are the support areas. So you can see that the price went down, took a support over here, went up, and it again came back to that particular price point, and it took the support and it went up. So if you buy over here instead of buying over here, you have a higher probability of making money. But it is not easy as it is seen over here. We will see some practical examples as to how one can buy over here, what are the rules that we need to take into account to in order to buy here. Similarly, the resistance is nothing but a price zone or a price point wherein there are a lot of sellers available and people are willing to sell at this particular price point. So the people who have bought at lower end of the range, they are willing to offload their stocks at this particular price point. And one should not enter into a stock when the stock is in the resistance or supply zone. When to enter into a stock and when to sell that stock, we will look at some practical examples. And just so you know, The support and resistances that we talked about, they are not permanent. So don't think that if a stock takes up support at particular price point, uh, there is a higher probability that if it comes to the same price point next time, would take a support. It is not going to happen. Hence, we need to keep in mind that supports and resistances, they tend to get broken, and when they get broken, they turn into resistance or supply, and vice versa. So for example, if let's say a support gets broken, so you can see over here, there's a support over here, there's support over here, and then one fine day this support gets broken, the stock goes down and it comes back to retest this particular zone. And now when it comes back to retest this particular zone, the earlier support or the prior support now becomes a resistance and the stock moves down. Similarly, if a stock faces a resistance and it breaks that resistance, and when it comes back to retest that, it turns into support. So the resistance turns into support. So we'll see some live examples of how this looks on the chart. Let me go to the trading view and look at the Reliance weekly chart. Few weeks back, I recommended to buy Reliance at around 2000, around 2050 levels. And why did I do that? I'll just explain it with a live example. I've selected Reliance chart on a weekly time frame. You can see that I will now draw the supports and resistances. So I will make use of the utility called as horizontal ray. So you can see over here that there was a resistance and that resistance turned into a support. So when I say resistance, what do I really mean and where that resistance is? You can see over here, there is a resistance over here. So I will mark it as red. You can see that the stock is taking a resistance and that resistance gets broken over here. Right? The stock moves up and comes back to retest this particular zone. Now, the earlier resistance turns into a support. I'll just mark it with the green arrow mark. And this has happened multiple times. The first time it happened here, second time it happened here, and now few weeks back it happened over here. The stock was falling and most of the TV analysts were bearish on this stock at this particular price point. And I was bullish on this particular zone for Reliance, and the reason is simple, that it came into a support zone and it is not really sufficient to enter into the stock that the stock came into a support zone. I'll explain how I took the decision of entering into the Reliance on long positions. So first of all, the basis for being bullish on Reliance was it took a support here and it made a bullish candle. You can see that it made a bullish candle, and this entire structure of 3 candles, this structure is also that it resembles the morning star structure. So those of you who know about the price action, so you can get to know what is a morning star pattern. So the morning star pattern consists of 3 candles wherein there is already a downtrend, there is a red candle, then there is a doji candle, and then a bullish green candle which engulfs both the red candle as well as doji candle. So if you want to enter into this particular stock, then we have to enter only when the high of the bullish candle gets broken. So this is the price point on which one can enter into the stock. Now, if you would taken an entry over here, how long will be there in the stock? So the concept of resistance now comes into picture. As you can see over here, there's a clear cut resistance at this particular price point. So when I had taken an entry over here, my target was that it will come back and test this support, test this resistance. So if you look at the percentage gains, right? So if one would have entered at this particular price point, then he or she would have gained 20%. 20% within few weeks is an awesome profit, right? And you can see over here that the stock is currently taking a resistance. So now there is a longer wick that has got formed at the resistance point, and that means the sellers are really active. Does it really mean that we need to sell? No. So there are some conditions for which, you know, those conditions need to be met. Only then we'll be able to make a decision of selling this particular stock. But let us not get into that now. But I'll also explain the rational. I explain the rationale behind this. Now I'll also explain what's the risk that I had taken. So my risk was I would have exited if the stock had closed below this particular price point, which is the low of the doji candle. So my risk was hardly 5%, right? So I had taken a risk of 5% and my reward was around 20%. So it was like 1:4 risk to reward. So if you know a simple concept of resistance and support, you can simply, earn a lot of money without putting a lot of indicators on the chart and thinking about what is going to be said about this particular stock on Twitter or maybe on television channels. It is extremely simple. All that you need to do is that you need to follow the simple risk management rules and enter into the stocks when this criteria gets met, right? Now let's look at some other examples. I'll try to explain my rationale behind entering into Voltas on a long position. So this is the Voltas chart. So I've already drawn the trend lines. Now you can see that this is a weekly chart of Voltas, right? And the stock is in a downtrend currently. It was in a downtrend, but I decided to enter into the stock at this particular price point. The rationale behind that was earlier this particular price point was acting as a resistance, and then there was a breakout over here. Post the breakout, the stock went up and it now came back to test the support, and this earlier or the prior resistance now becomes support. And you can see that the stock went up and again it came down to this particular price point, and my risk was hardly few points. For example, if I had entered into this stock at around 740 or 745 levels, my risk was I would have exited if the stock had closed below 715 rupees. It was hardly a few percentage point risk, right? And then when I'd entered over here, my target was that it will come to this particular price point. If you look at the percentage reward, so my target was around 10 to 15%, right? Now you can ask me why I kept my target over here. You can see here that there is a resistance. So I've drawn a trend line resistance. So to draw a trend line resistance, I normally use a line chart. So I join the peaks of this particular trend. You can see over here that whenever the stock touches this particular trend line, it falls. That's the reason I had taken or considered my target as only around 10 to 15%. And you can also see the concept of resistance working out over here. The stock tried its level best to break this resistance thrice. When it did not, then it fell down. Now, under these circumstances, how will you trade? So you should not take a trade over here. just because the stock is taking resistance. What you need to do is that you need to draw this line. This particular stock was trading in this zone, right? If I draw this zone using the rectangle, the stock was trading in the zone, and then one fine day there was a breakout or a breakdown. I would call it as breakdown. That means it broke the support. It took the resistance, it broke down, right? And then if you enter over here, right, so somewhere around 1187 or 1080, you would have got huge profit. So it went down. So let's say if you had entered into this particular stock at this particular price point, when the low of this candle gets broken, so the low of the candle was 1033. So if you had shorted this particular stock in the futures market, then you would have got a huge profit, and that profit would have been somewhere around 30%. And 30% is a very huge margin in futures, right? And that too within few weeks. If you had created a position over here, then you would have got huge profit. Now, let's say if you had missed the bus to sell this particular stock at this point, you got couple of opportunities. So the first opportunity came when it tried to test this. So this was the price point at which you could have taken a short position. The another short position you could have taken over here, because you can see the price reached this particular point and it took the resistance and the sellers pushed the price down. That means there's a seller who is actively selling over here, and then you can see the stock continued its downtrend. So this is what I call it as a price structure or a price action. If you try to understand this price structure or price action, you will not make any wrong decision or wrong entry. I'm not saying that with this you will be successful every time, but this gives you a better probability of entering into the stock or exiting the stock. I'm going to also explain other example of, let's say, SBI. Few days or few weeks ago, I decided to create a short position in SBI. You can see over here that there was a resistance that the stock took, and it again came over here and it made a kind of a doji candle over here, and it couldn't really go above this particular price point. So I decided to create the short position when the low of this doji got broken, which was 604. And I decided to cover my short position over here, because if you can see, this particular price point is a support zone. So it is not easy to break it below this. And you can see now that this week it has made a kind of bullish hammer. It is not a hammer per se, but it is a bullish candle because the buyers have pushed the price up, and this particular activity happened in the support zone. And if whenever you see certain candles such as bullish hammer or inverted hammer or maybe a bullish engulfing candle in the support zone, it adds to the probability. So it is not just sufficient to know that, okay, the stock came to the support zone and I'm going to take an entry. So if you want to add few more parameters to make your trade highly successful or highly probable of having a winning chance, then you can look at these candlestick patterns as well. Okay, let's look at some more example. Infosys. A few weeks ago, I decided to create short position in Infosys futures. Now I'll explain why I did that. So let's first look at the line chart, right? So if I draw the line chart by joining these peaks, you can see over here that there is a resistance, that every time it touches this, it takes a resistance. Now I'll apply the candles. You can clearly see that whenever the stock reaches this particular price point, it takes a resistance and goes down. I had taken a short position over here when it came to test this particular trend line, right? But as you can see that during the week, this stock went over and above this particular price point. My entry was somewhere around 1475, but it did go to 1490. However, I did not panic because I knew that my risk is very, very low. So if it had closed above this trend line, I would have exited in loss, but my loss would have been limited. And I know where I'll be exiting. And this is a very logical entry, and this is not based on just my whims and fancies, right? I would have exited if the stock had closed above this particular price point on a weekly closing basis, because this is a weekly chart and the closing basis is important, because during the week the stock might go up, but the price action gets confirmed only on the closing basis. I decided to stay on this trade because it did not close above this, and this week the stock has seen a good down move, and I covered my profits over here. And why I covered my profits over here? Because I was trading in futures and I did not want to take a big risk over there. And the other reason was there is a support zone that I've seen here, that the stock earlier had a support over here, and there's a high probability that the stock would again try to take a support over here. Now it is consolidating, and it's a no trade zone for me. As of now, I will take an entry into this particular stock only if the stock closes above this particular price point and breaches this sloping trend line resistance. Only in that case it makes sense for one to take a long position. When I say long position, buying this particular stock, thinking that the stock would go up, right? And let's look at one more example of HDFC Life. Okay. Yeah. So you can see over here, the stock had taken a support. There are multiple supports over here, and the support got broken. And once it got broken, it went down, and then again it started taking resistance over here. So these are the resistance points wherein you can take a short position, because the candle structure itself is evident that based on the candle structure, it is evident that the stock is taking a resistance over here, right? You can easily take a short trade over here, but again, basis the rules, like I would take the short trade only when the low of this particular candle gets breached. So if I taken the short position when 580 560 got breached, I would have got to move till 480, right? And now you can see that the earlier support is acting as a resistance. If you see here there's a bearish action, but at the same time this particular resistance is now acting as support. So we need to see how the stock behaves. Only then we'll be able to take any position in this stock. Like this, with a simple example of, with simple concept of price action, that is support and resistance, one can easily enter into trade and make good profit. However, you need to keep certain points in mind. Not every support would work, not every resistance would work for you. the higher the number of times that the stock comes to test the support gets weaker. Now, I'll give an example of Laurus Lab, wherein if you had entered into Laurus Lab stock at the support, what would have happened, right? Okay. So this is the weekly chart of Laurus Lab. Now you can see that every time the stock touched 440 to 450 zone, it took a support, it went up, it took support, it went up, it took support, it went up. Now, did it make a higher high? No. So this was a prior high. Again, this it made this high. So you should not take an entry, long entry over here. Your long entry should happen only if the stock closes above this particular price point, right? Now, since the stock did not cross its prior high and it again came back to retest its support, here I did not make any long entry. The reason for that, this is simple. Already the stock had tried to test the support thrice. It went up from this particular price point, but it did not make a new high. That means the sellers are active over here. And again, the price came back to test the support zone. If you see over here, it did make a bullish candle. But as I said, I was cautious about entering into this stock for a long position. The reason being, this stock is being tested at least 4 times, and more the number of times it get tested without making the prior high, without making the higher high, the probability of breaking it is very high. And here you can see that the stock broke down and it went at least 150 to 170 points down, right? Now, I also wanted to take a long position in this particular stock at this particular price point. The reason for that was I had drawn my support levels. When this stock breached this support, the next support was in this zone, and I was confident that the stock would take a support over here. And if you can see, the stock did make a bullish hammer, and this was the day on which the results were announced, and on the television channels many analysts were bearish on the stock because the results were not really good. The results were very dismal. But just because the results were dismal, it doesn't mean that the stock won't move up, because there are several parameters that the investor community takes into account. For example, if all the negatives have been priced in or not at this particular price point, this becomes basis for smart money to enter into the stock. Now, if you can see over here, this did make a bullish hammer. So my entry point should be above the high of this bullish hammer, and my stop loss should be a weekly close below this. So if you enter into this, if you want to enter into the stock, once the bullish weekly hammer gets formed on a closing basis, the very next week you can enter into the stock once this high of 310, the high of this candle 310 gets breached, and your stop loss should be 278 on a weekly closing basis. So if you had done that, you would have got at least 33% or 30% profit within few weeks, right? Isn't it amazing? So I hope that you have understood the basic concept of supply and resistance, and you would be using this. I know that there are some other parameters that or considerations that one would need to account for in order to make a decision to enter into a trade. This is not just enough to enter into a trend, but This will definitely give you a direction uh, and help you understand whether you're making a right or wrong decision of entering into a stock. So in the next video, I'll be explaining some of the fine tunings that one can make while entering into the stock based on support and resistance. I hope you found this video informative, and I'm not a SEBI registered investment advisor. The intent of this video is to make people understand the simple price action concepts